Okay, good morning and welcome back everyone to our thematic investment series. My name is Tony Zhang. I'm the chief strategist here at OptionsPlay. And today we're here to talk about a topic that many of us have talked about in passing over the past few months, perhaps possibly even the past few quarters with respect to the 5G revolution. Many of the major carriers have been talking about this for years, but we're starting to see these spectrums come online and different cities have a 5G availability. So what we want to talk about is the growth in 5G and more importantly, the Internet of Things and the growth of that segment of the market and what that enables for both consumer and industrial applications and the type of opportunities we see as a result of that. So before we get started, what we're going to discuss here today is purely for education and demonstration purposes. It is not a solicitation or recommendation to buy or sell any specific securities. And remember, these thematic investment series are more for longer term investment ideas, taking a look at a specific industry, look at the trends within that industry, and understanding where we believe opportunities are for the next few years. We're not talking about our normal market outlook sessions where we're looking out a few weeks out, potentially a few months out. This is really looking a few years out, just to clarify for those of you that are new to our thematic investment series. So today we're going to cover both 5G and IoT. We'll start off with a broad overview of 5G and what it provides in terms of a spectrum or a network and what that means for the IoT industry and trends. IoT as an industry has largely been around for almost 5 or 6 years now. We see a lot of this application mostly on the consumer side, but really the trends that we are looking at is more so on the industrial side. So we'll talk a little bit about the use cases of industrial IoT, which is a separate segment or subsection within IoT. We'll talk a lot. We'll discuss the industry itself and the specific publicly tradable companies that are that have investable themes within IoT, and then we'll take a look at both the technical and fundamental factors of those companies before we open this up for Q&A here at the very end. But the primary theme that I want to help investors walk away from is really an understanding of what are the primary investable themes for 5G and IoT companies over the next 3 to 5 years or so. So my name is Tony Zhang. I'm the chief strategist here at OptionsPlay, and me and my team have put together this research to give you a better understanding of the industry, the trends within the industry, and the opportunities and the companies that operate within the space, and the risks and rewards that we see with each one of these companies. So we'll start off with just taking a look at 5G and what it actually means. It's for many of you, you're familiar with this, or at least in some way, shape, or form, you may have heard this from your wireless carrier, and they're advertising the fact that they now have 5G. Whether you are with AT&T, Verizon, or T-Mobile, I'm sure you've seen the ads. But 5G really is just higher bandwidth and faster connectivity, about 5 times faster than the current 4G available out there. Even though real speeds out there is still not quite there, nowhere near the 1,000 megabits per second that 5G is promising. Most markets at best are delivering about half of that. But the real advantage here is really latency. Latency going down from about 100 milliseconds down to about 1 millisecond. And it really allows for significantly more devices to be connected to the network, about 10 times more devices connected for every square mile compared to 4G. So you're talking about a lot more devices being able to communicate to each other very fast. I'm sorry, not even just very fast, but a large amount of data being sent between multiple devices and having devices being able to talk within amongst themselves. That's really the advantage that 5G networks allow you to do. Now, traditionally, you would only be able to do this within your house on a Wi-Fi network. Wi-Fi networks are fast; they can deliver a lot of speed, but Wi-Fi's are limited to just basically, a few hundred feet within your house. 5G basically makes this available nationwide. There are many limitations to this. Number one, it cannot carry data as far as 4G, which that means is that you just simply need more cell towers to boost the signal and to be able to provide full coverage of 5G. This is really the biggest challenge that we see right now with the delivery of 5G. A lot of places that claim to have 5G in terms of cities that offer it have very spotty service. One side of the street you have 5G, the other side of the street you don't. This is the big challenge with 5G. It also requires beamforming, which requires a specific type of cell tower, which has to aim the beam specifically at a space at a particular direction, versus 4G is much better coverage. And the big limitation is that the fact that every single device that connects to 5G needs a new radio device. You can't use your existing phone and connect to these 5G networks. You effectively have to buy a brand new phone. So largely, what it provides is a significant increase in mobile speed, but also increased connectivity between devices. And that's really the key, is that most things now connect to a cell tower, but to connect with amongst themselves, that's really the advantage that 5G provides when we talk about the Internet of Things. You might have heard a term IoT. It refers to the term Internet of Things. That's one of the opportunities in terms of devices that the 5G network enables. So just to understand, 5G is simply just the network that enables these types of devices. The opportunities that we see predominantly are within the Internet of Things, the devices and the application of these devices here over the next few years. So an Internet of Things is a fairly broad category. It really refers to a system of devices that are connected to a network where the data can be shared. Again, this is very similar to your Wi-Fi network and all the things that are connected to your Wi-Fi network today, but just on a much larger scale. It allows sensors to capture everyday data, whether it's everything from temperature data to noise data to just about anything you can possibly sense from a device. It can be captured and then streamed and aggregated for a specific platform to be analyzed. And there's various applications here. And what we're going to talk through are some of these applications and some of the companies that are applying these applications for both consumer and industrial opportunities. But really, when we look at the industries that could potentially use IoT, it's a pretty broad spectrum here. Mostly on the industrial side, everything from retail to manufacturing. Transportation is one that many of us talk about. A lot of investors currently have some investments in electric vehicle companies that have autonomous driving technologies, whether you're talking about Tesla or GM or some of the Chinese electric vehicle opportunities. These are all leveraging 5G and IoT type devices to enable that. Healthcare is an interesting one because there are some immediate applications that have been approved by FDA due to COVID. That's an interesting one. Everything from the manufacturing is probably the most obvious in terms of using IoT, but actually residential is where we have actually the most IoT devices today in use. But again, only right now on mostly Wi-Fi networks. But as 5G expands, that's really where things can get quite interesting. So looking at IoT, the number of devices that have grown here from 2015 to 2020 have roughly doubled here. And again, these devices that are largely connected today are mostly over Wi-Fi networks. But as the 5G network starts to take hold, this is really where we start to see a bit of a hockey stick moment, where our expectation is that this will continue to grow, especially as 5G networks continue to grow capacity and speed and latency and just overall coverage. So we're sort of at that exponential kind of hockey stick moment here for these IoT devices. And again, we'll take a look at the applications, whether commercial versus consumer, and where those opportunities are. But the main driver here for IoT in terms of why we see that exponential growth really is just the development of 5G. Like I said, limitations of Wi-Fi is not on speed, it's in terms of size. You can only, Wi-Fi networks can only go so far. And these 5G networks really enable device to device communication. So if you think about autonomous driving, not only do the cars need to know where they are, cars need to know where other cars are. And when we talk about smart cities and autonomous driving, the cars not only need to be able to understand where they are, they need to be able to communicate with each other. And that's where these the 5G networks enable these devices to be able to do that. And smart sensors are also becoming significantly cheaper, which simply makes these devices, the applications of these devices much more price sensitive. And if you think about the smart home devices that you currently have in your house, think about what price they were a few years ago, what price they are now, like the smart light bulbs and the different temperature gauges that you can buy for your house, those have tumbled in price by probably 50, 75% here over the past few years. And this all comes down to these smart sensors becoming cheaper. We are seeing significantly increased interest in government spending and infrastructure spending along this particular uh, industry. And that brings in some large industrial players here that we're going to talk about here today. Also, climate awareness is a big part of this. A big part of monitoring emissions and monitoring, how cities are doing with respect to climate change, and the goals that they have with climate change require monitoring. It requires active monitoring and reporting on this type of data. And these IoT devices are really enabling that cities to do so. And also just automation and manufacturing process is really one of the main drivers of this at the moment. And this all comes down to just simply efficiency, safety, and speed. If you can automate as much of your manufacturing process as possible, that enables companies to save money. That is a main driver of using these types of devices in commercial applications here today. But there are some major constraints and concerns with this type of opportunity. Most of it is around data and privacy. Concerns that if all of these devices are now connected to the internet, imagine if everything from your house, your lights, your security system, your fridge, everything is connected to the internet. What if a hacker gets in and screws up with everything in your house, wipes out all the data on your hard drives, whatever that is, holds your house effectively hostage? There are many concerns around data and security. So these are some of the constraints that I think we see on the commercial side. I'm sorry, on the consumer side. But imagine that happening on an industrial scale. Imagine if I don't know, a car manufacturing plant that's completely enabled by 5G and IoT gets hacked and shuts down the entire plant. Those are the major issues that I think on the commercial side that are concerns for most companies. Right now, also just the lack of standardization in terms of the platform that all the devices communicate amongst each other is a big issue here. We'll talk about some of the companies that solve that. The high cost of implementation right now, that is coming down. Also, a lot of the systems that currently work on legacy systems, so they need to be converted. But these are some of the problems that these bigger players are coming in with solutions for: more standardization, selling this whole thing as a service. So instead of having to provide the software and then you provide the hardware, or vice versa, they kind of provide the entire solution of hardware and software. So companies can just come in, apply these things to their manufacturing process or commercial processes, and get up and running. So again, those are some of the opportunities that we see. Now, the use cases, again, are fairly broad, and there are so many different ones. But some of the ones that I think are around today that most investors are familiar with are like the smart appliances that we have today, security systems that we have today. Everything from the smart thermostats that we have in our house. We all have many times fitness tracking and health monitoring. That's actually a huge one from the healthcare space that I think is worth looking at. And then if we look a little bit further, this is really where we start to get into the more large commercial applications and more industrial applications that have, in my opinion, large opportunities here over the next few years with respect to smart cities, especially with climate change and just making cities more efficient. This is really where IoT shines and potentially has a large opportunity. We are already seeing quite a bit in terms of industrial automation here. We'll show you some of the companies that are working in this particular space. And for those of you interested in the green energy kind of renewable space, smart energy requires active monitoring in terms of 5G. And then looking out 3 to 5 years or so, autonomous vehicles, navigation, maintenance, these types of things all require high performance and IoT type related chips and 5G networks. That is a big opportunity for those of you that are invested in some of the electric vehicle type companies, whether you're talking about established players like GM or Tesla, or even some of the newcomers in China. The connected vehicle space is a huge space for this IoT. And when we look at opportunities in terms of geographic region, Right now, the highest opportunities are in faster growing areas like Asia Pacific. Europe and North America are certainly up there, with South America, Central America, and Africa sort of lagging behind here in terms of regional growth rates. So when we look at companies within this particular space, we also want to keep in mind of where do they have the largest geographic exposure, and we are prioritizing companies that have more geographic exposure to China, Asia, and Asia Pacific versus North America and Europe are not far behind, but not as fast growing as a market with respect to IoT. Now, the one thing again that I think is very important to look at is the fact that up until pretty much now, the consumer side has outpaced the industrial use of IoT. Again, this is due to because prior, most of when we talk about IoT devices are not yet connected to a mobile network. They're connected to the Wi-Fi network, and so we have smart homes. We've been taught. Many of you probably have smart devices at home, whether it's smart lights, smart appliances. These are the types of things that have been utilized so far. But our expectation going forward is that the commercial application is going to start taking over the commercial side in the next couple of years. So where commercial starts or industrial starts to outperform the consumer side, especially as 5G rollouts become more widespread, we're going to likely see that application become more and more faster growing than the consumer side. So the one thing that I think that we want to talk about here is also on the electric vehicle side, or rather just the vehicle side, because there's a lot of talks about autonomous driving here. Tesla has already kind of paved the way here from the major car makers with respect to autonomous driving to some degree, certainly not fully autonomous yet. But more and more vehicles right now already have the technology and the hardware to allow for autonomous driving. The only thing that we lack at the moment is really the software, the regulation, and the 5G networks that truly allow it to be fully autonomous. So as 5G networks come online, this is really where we expect this segment of the market to drive quite a bit of the investments and quite a bit of the growth within the vehicle space. So with that, I want to take a look at the individual stocks and opportunities that we see in this particular theme. But I do want to express the fact that there is an ETF that you can trade for, and we always talk about this because not everyone wants to do the research of individual companies or have to pick individual companies. Many of you like to just invest in a theme in the long run, and you don't want to go through all the process of looking at technical and fundamentals. There is a IoT ETF called SNSR. Has about $400 million in assets under management, so not a huge ETF, certainly well shy of the $1 billion that we typically look for in an ETF, but recently doing quite well here, breaking out above the $25 level here during the middle of last year, has grown quite a bit here over the past 6 to 8 months. We've pulled back along with most other tech stocks, about 10% here, a little over 10% here over the past month or so, and seemingly finding a little bit of support here around this $32 level here. So this is a potential entry point actually for this particular ETF right now when we look at the technical chart here. But we'll break down many of the stocks within this specific ETF. We'll take a look at the companies, both technicals and fundamentals, and give you a better sense of this industry and the type of opportunities that we see. But for those of you that don't want to do that, you just want to invest in the theme, there is an ETF that you can use, SNSR. So let's start off with some of the giants in this particular space. And when we talk about the giants, they tend to have, only a relatively small portion of their business exposed to these specific themes. But Cisco does stand out as a huge beneficiary of the increase in bandwidth use from 5G, Wi-Fi 6, as they sell pretty much a very broad range of technologies across networking, across security, across the connection of different devices. So Cisco is really one of the, well, even though they're one of the major companies with relatively small exposure, in itself to IoT, they have a very large exposure to network traffic in general, and will benefit from the rise in bandwidth consumption across 5G and Wi-Fi 6. So this is a stock that has, from a technology perspective, largely underperformed the technology sector over the past few years. This is a weekly chart here on the left-hand side. But recently, over the past few months, have really started to outperform, and over the past few weeks, have really come back to life, breaking out above this $48, $49 resistance level that has been in place for the larger part of almost 2 years here. Finally breaking out above this and potentially rising up to this $58 level here. So Cisco really turning around here, and they really actually offer a pretty extensive portfolio of IoT solutions. And what's interesting is that they recently acquired a company called Jasper Technologies, which is a provider of cloud-based IoT software as a service solutions. So what this shows you is that, here's a company that is very well positioned within the networking and bandwidth space, that will likely take advantage of this increase in bandwidth as 5G is rolled out. They are making acquisitions within the space to specifically target IoT commercial applications. And the reason that Cisco has underperformed for so long is because they are largely a hardware provider or hardware maker, and hardware is simply just underperformed software, where software has greatly outperformed within the tech sector. But Cisco it's a big ship. It's slow to move things around, but they've recently have now finally crossed the threshold where 51% of their revenue comes from reoccurring software revenue, as opposed to predominantly hardware-based business. So they are turning this ship, and the stock price clearly reflects that. So this is one of those plays that's not a direct 5G/IoT play, but certainly one very heavily influenced by this particular industry. Cisco, a large company, generated $48 billion in revenue over the past 12 months. But as you can see, revenue so far has been very flat here throughout the last 4 quarters. Earnings relatively flat as well. But this is really where we see a potential turnaround here for this company that has largely underperformed the technology sector here over the past couple of years. The other big player here in this particular space is Verizon Communications. Now, again, Verizon Communications as a whole, the 5G play for Verizon is still a very small piece of their revenue. And the reason that I'm using Verizon versus the other 2 carriers, AT&T and T-Mobile, is because even though these are the 3 main competitors in the 5G space, and we are certainly seeing these 3 companies compete very heavily to gain dominance within the 5G space, right now there's no particularly clear winner as to who is deploying 5G better, who is deploying 5G faster, who is deploying networks that are better for commercial and consumer applications. However, the reason that I'm using Verizon versus the other 2 is that, first of all, I think the true opportunities for 5G is really only between Verizon and T-Mobile. The reason I say that is because AT&T simply has too many other businesses where telecommunications is largely a smaller piece of their business compared to their media business and all the other businesses that they own, like Dish Network. Verizon, AT&T, out of the 2, T-Mobile is by far a leader in the wireless communication space, but T-Mobile largely only has a consumer customer base. Verizon has a much larger business segment out of the 3 major carriers. So when we talk about industrial IoT, taking over the next few years and being the true opportunity here, that's why I think Verizon is better suited for the industrial side or the commercial applications of 5G versus T-Mobile, even though from the consumer side, T-Mobile is a strong leader here. As far as a 5G network perspective, these 3 networks are fairly on par at the moment. So this is really where, I don't think I need to explain to everyone here what Verizon does. But as you can see, the stock price has largely just moved sideways here over the past few years versus T-Mobile has seen a substantial outperformance versus AT&T and Verizon. But again, that comes from their increase in market share on the consumer side. And while 5G will be applicable on the consumer side, it's far more from a revenue perspective, I think the opportunity is larger on the business side, and that's really where I think Verizon has an edge here versus the other two players. But recently enabled with a company to enable localization of IoT devices. This really comes down to the problem that, as we talk about IoT devices, being able to roam around, right now 5G devices are really connected to a very small space, and especially when you go overseas or if a device moves outside of the geographic region, there are connection issues. And this is really one of the companies that provides global coverage for the IoT devices. So Verizon thinking again for the business application here of 5G and IoT. And this is really where I believe between the three major carriers, Verizon does have an advantage here. And then when we look at some of the companies that provide this type of commercial IoT opportunities, one of the major players here is Honeywell. And again, Honeywell is one of the big players here, $32 billion in revenue over the past 12 months. They provide a very, very large industrial application across many, many industries, everything from aviation to building automation, which is one of the major applications of 5G, industrial process automation as well, another major application of 5G, and safety equipment. These are the three main categories. Not aviation's not included in this. Building automation, industrial process automation, safety equipment. That's really where Honeywell has their IoT business is predominantly within those three verticals. And they generate about 35% of their revenue from these three business lines, from building automation, industrial process automation, and safety equipment. So that's really where we see the opportunity of IoT related. But at the end of the day, that is only 35% of their revenue. It's not the majority of their revenue. So this is where, the bigger companies have a slight disadvantage here because they have more diversified businesses. IoT, as big as the opportunities are, represent a relatively smaller piece of the pie from them. The big risk that I see with Honeywell is the fact that they derive the equal amount of revenue, about 35% of their revenue, from aerospace. And this is one segment of the market that we obviously are not as bullish on here over the next few years. We believe 5G is going to be far larger opportunity than aerospace over the next couple of years. So this is one of the names where you have a significant risk profile added to it, despite having a strong 5G IoT type opportunity. It's just the aerospace side. But the stock price so far doing fairly well here, actually breaking out above this $180 level here, holding that level so far, trading near those all-time highs while equity markets continue to chop and see a little bit of weakness. Honeywell actually holding that fairly strong here, but it is, again, one of the strongest names within industrial IoT. So when we talk about commercial applications of IoT, Honeywell will certainly be a leader in this particular space, especially with the large commercial applications. And they provide industrial IoT as a service, meaning a company can basically say, I want to automate my entire industrial automation. Honeywell will actually come in and set up the software, set up the hardware, set up the management, the platform, everything for the business. So the business can basically have a turnkey solution. And that's the benefit of having these large cap companies come in and being able to provide solutions in this particular space. And they have the contracts with the major commercial players that could potentially use this. So that's a benefit of Honeywell, but there is that one caveat that a third of their revenue comes from aerospace. And that's going to take, in my opinion, a bit of a damper here on their revenue lines here over the next few years. So when we look at a smaller player here, that actually is, from my perspective, I think a better opportunity, a smaller player, Rockwell Automation. I've talked about Rockwell Automation pretty much since the start of the pandemic because we saw huge trends of what we call onshoring or reshoring. Onshoring or reshoring is basically when manufacturing companies that have largely offshored their manufacturing facilities to China and Vietnam and other places around the world. When the supply chain was disrupted during COVID-19 and they couldn't get their goods out or had to pay a substantial premium to get their goods out, a lot of US manufacturers and manufacturing processes around the world started to think about, how do I bring that manufacturing back onto onshore or reshoring? And Rockwell Automation is really one of the leaders in terms of building manufacturing and solutions for factory and process automation. So they are a smaller player here, but 55% of their revenue is from industrial control products and solutions. So unlike Honeywell, or similar to Honeywell, this is a major part of their business, but it's a bigger piece of the pie for Rockwell. As a smaller company and a bigger piece of the pie, I do think that this is a better opportunity than Honeywell, even though I think both as a theme belong in your portfolio. Rockwell Automation, in my opinion, is slightly stronger from that perspective. Recently breaking out above this 210 level here and continue to move higher here, just trading shy of that 265 all-time high. Potential breakout here to the upside from a technical perspective. They provide, again, both hardware and software solutions for industrial automation. So similar to Honeywell, providing that full service turnkey solution, but smaller company, smaller contracts. So this is where they are slightly behind, but again, because they derive 55% of their revenue from this, I do think that this is a potential leader in this particular space. As you can see here, they've recently had a slight growth in terms of revenue here. Earnings did go, they did have substantially higher earnings, and that's largely what has been driving the stock price higher here over the past 6 to 8 months or so. My expectation is that this will exceed their pre-pandemic revenue numbers, and the stock will continue to move higher here from an automation perspective. So, we've talked about the networks. We've talked about the companies that provide commercial applications, but a big part of 5G and IoT are the semiconductor chips that enable all of this, because without those semiconductor chips, none of this can work. So Qualcomm is by far the largest player in this particular space with respect to mobile communication, radio frequency chips. I think most of us are aware of, Qualcomm and what they do, but they do have a focus within the industrial IoT application more on the automotive side that we have seen from their chips. They provide end-to-end IoT as a solution as well. They predominantly right now actually have what's called the Smart City Accelerator program. They basically provide solutions for cities that are looking to create smart cities, and they are simply using this as their business unit to go after commercial IoT applications. So automotive and smart cities is where they're focusing their attention on. But the core of their business today is selling chips for smartphones. The one thing that I will say about Qualcomm is that Apple is starting to lessen their dependence on Qualcomm chips here. Apple has diversified their mobile frequency chips away from Qualcomm so that they don't have a single point of failure, if you will, with respect to their mobile chips. So the core business that they're in right now is slowing down to some degree, but Qualcomm, by far still the number one player in this particular space, has a lot of other clients as well on that mobile chip space. So this is really where you have a slight risk here as Apple starts to diversify their use of Qualcomm chips. And then as Qualcomm is still a leader in this particular space, is likely going to be able to close some large government contracts for commercial IoT applications, again, across that smart city. They seem to have a leadership position within the smart city space. So everything related to smart city, I do think that is going to be a pretty significant opportunity within IoT. And Qualcomm is a leader in that particular space. The next one I want to take a look at is Skyworks Solutions. Same thing, very similar to Qualcomm, much, much smaller, about the 10th of the size Qualcomm did about $23 billion in revenue over the past 12 months. Skyworks has only done about $3.4 billion, but they focus on effectively the exact same market, radio frequency chips, specifically for cellular system solutions, very similar to Qualcomm, but they have actually expanded their market share in Asian markets like China through device makers like Apple and Xiaomi. So this is similar to the Honeywell Rockwell kind of comparison, where you have one large company with some risks versus a smaller company with a larger revenue. That's kind of how I'm seeing Qualcomm and Skyworks. Is that Skyworks is a smaller player, but actually increasing their market share here. And they have a high exposure to the 5G smartphone market. 5G devices are expected to grow by about 66% in 2021 alone. And they're also expanding into automotive and IoT. And they have a pretty strong diversification across multiple industries. They don't have a segment of the market, if you will, that they're really going after like Qualcomm is with smart cities. They kind of have their hands in a lot of different industries here for IoT. So that could be an interesting diversification strategy versus kind of focusing on one specific commercial application. But this is, again, one of the smaller players. As you can see, revenue growth has actually really exploded here, both revenue and top line growth, top and bottom line growth here. What's interesting to see is a smaller company like this being quite profitable and with strong margins here. So that's really one of the reasons why I quite like Skyworks. Breaking out here, we've had the pullback here, just like all other tech and semiconductor stocks, and potentially having a better opportunity to enter for a longer term play here. So Skyworks, smaller player, potentially larger opportunity. Dexcom is an interesting play. This is a small company, and this is one of the few companies that we research that actually sells an actual IoT device, rather than the companies that are providing solutions or providing the networks or the components for it. Dexcom is actually selling an actual IoT device. They are in the medical field. They develop and manufacture predominantly diabetes management devices and glucose monitoring devices. They have multiple chips here. And what's interesting about this particular company is that because of COVID, the FDA has allowed emergency use of their remote monitoring of their glucose monitoring devices. So due to COVID, even the hospitals who wanted to continue to monitor their patients but wanted to do it remotely is using Dexcom technology to do it remotely. So the fact that FDA has allowed emergency use of this for hospitals for the past about year and a half, for the last almost year now, this really potentially paves the way for much larger scale approval of actual approval, not just for emergency use of their medical device monitoring services over a 5G network. And this is what's particularly interesting, is that this is a medical device company that has been provided with FDA approval, and they recently partnered with a company called Core, which is an IoT solutions provider here. So the fact that they've gone out and partnered with a IoT company or a solutions provider really shows that this is a company positioned for providing remote monitoring over using a medical device. So when we talk about medical applications of IoT, this is by far one of the leaders in this particular space. And that's why it's one of the fastest growing companies within the quote unquote IoT theme, even though it's a medical device company. So this is an interesting one. As you can see, revenues have continued to grow, actually started to accelerate here. Their income has also continued to grow here, extremely high margins on their business. Breaking out from this 160 level here due to COVID, pulled back all the way down to 180 and has shot up all the way to 460. This is a volatile stock. So this is one where the opportunity, I do think, is largely priced in already. So I would only wait for pullbacks here to look for opportunities in this particular space. And I think there could be a little bit more downside here into that $300 area before we look for further long opportunities in this particular space. But the opportunity is really where FDA allows full use of their remote monitoring, not just for emergency use because of COVID. A lot of investors are looking at that potential as a huge opportunity for this particular company to get into the medical IoT space. So again, this is one of the few companies that already have approved FDA use of a remote monitoring from a medical use perspective. And I think this could potentially pave the way, especially as they have partnered with a leading IoT solutions provider, which shows you a little bit about the way that management is thinking and where they want to head with this type of device. And lastly, I want to talk a little about NXPI. This is a stock that recently was just announced to be added to the S&P 500. This is one of the smaller semiconductor manufacturing companies as well in the grand scheme of things, doing about $8.6 billion in revenue here over the past 12 months, but really have continue to grow very strongly here since the start of the pandemic. They provide all of the high performance chips for automotive and security applications. I think they're far more known on the automotive side, but they actually provide a lot of their chips for security applications. But pretty much everything related in terms of processing power that you need in a car, whether it's from powering the smart devices to run navigation systems and info entertainment systems within your car, all the way through autonomous driving processing, airbag, crash detection, chassis detection, all of these chips, all of the processing power that happens on a car, everything from managing, simple things like your air conditioning to autonomous driving are created by companies like NXPI, and they have a fairly strong leadership in this particular space. So as you look for autonomous driving as an opportunity here over the next few years, NXPI is one of the companies that have position themselves very well for building the semiconductor and chips that enable that. The other thing that we actually don't really think about too much is the fact that, since COVID, contactless payments are becoming the norm. We don't use cash as much anymore. Things like Apple Pay have predominantly been the primary form of payment when we're talking about in-person transactions, and all of those transactions need to be secured. And NXPI is one of the leaders in terms of providing the security around those types of contactless payments, whether you're talking about the chips in your card or Apple Pay. Those applications are another area of the business that NXPI is involved in. And that's really where I think NXPI, from a semiconductor space, outside of the Skyworks and Qualcomm, which are more in the 5G space, NXPI is more on the processing side. And that's really where, when you look at semiconductors, you have to segment between the two, the mobile chips that enable the communications versus the mobile chips that enable the processing. And NXPI is on the processing side versus Skyworks and Qualcomm is on the communication side. Now, NXPI is by no means the only player in this particular space, but they do certainly stand out in terms of how they're positioned when they're with this particular space. You do have other performance like analog devices, even Micron and Texas Instruments compete in this space, but how much revenue they derive from this particular opportunity is relatively small compared to NXPI that derives almost 100% of their revenue from this theme, if you will, from IoT and the applications of it for future autonomous driving and commercial applications on the car and the security side. So like I said, security, main drawback for connecting all the devices in our world is security, and NXPI is a leader in that particular space. So that gives you a sense for the a broad sense of the different players in this particular space. It is by no means an exhaustive list of the different opportunities that we see here within this particular theme, but these are the types of companies that you want to start thinking about, whether it's the companies that enable the networks that allow 5G to happen, for 5G to happen, which is, Cisco. And if we look overseas, you have Ericsson, these types of companies, the telecommunication companies like Verizon and T-Mobile, these enable the 5G networks that allow IoT to really take off. And then you have on the commercial side applications, the industrial IoT, you have big companies like Honeywell, you have smaller companies like Rockwell Automation that really cover on the commercial side of things, which, like I said, is probably going to be faster growing here over the next few years. And then you have the chip makers that allow for the actual communications between devices and these networks. So Qualcomm, Skyworks, in all of these scenarios that I've put together here, it does seem like the smaller player has the slight advantage here, whether you're talking about Skyworks versus Qualcomm or Rockwell Automation versus Honeywell. And then you have specific device makers. Now, there are not too many of these device makers that currently are investment opportunities from a publicly traded company perspective. Dexcom is an interesting I would say medical application. You also have some more consumer applications like Garmin that are, related to this theme. But I think Dexcom is a very strong investable theme here at the moment that actually has a device that is FDA approved for remote monitoring. That is very interesting. It's a relatively small company as well, which means that the opportunities are larger in terms of upside growth. And then you have processing power to enable these types of devices on the ground with you, if you will, with NXPI. So that covers what I wanted to share with you here today. And I just want to thank our members for allowing us to continue to do this and provide this research to you guys and take the time to take a deeper dive into these industries and provide you with this type of research, because I think it's very, very important that when we talk about 5G and IoT, and I know we see this a lot, and when that term gets thrown around a lot, it's really important to understand the industry, what the opportunities are, and how to source, which companies have the most exposure to this particular opportunity, and which ones are best positioned from a revenue perspective or from a positions perspective for this opportunity. So I hope that this provided you with that guidance, provided you with some ideas as far as what drives this, and also the opportunities that we see within specific companies. So for those of you that are not yet members, I hope that you consider supporting us and allowing us to continue to do this every single month. Membership is just $75 a month or $500 a year. You can sign up at trade.optionsplay.com/member. Or if you don't have an account yet and you want to sign up for the next one, you can sign up for a free trial at OptionsPlay.com. So with that, what I'll do is I'll open this up for Q&A here for a few minutes. I do have a few minutes before the market opens. And if you have some questions, there is a Q&A section. Feel free to type in a question and I'll try to answer a few before we have to get off. David asked, what about Spectrum, their new cell phone segment? David, if I'm not mistaken, I'd have to do a little bit more research, but if I'm not mistaken, Spectrum does not actually operate their own network. I'd have to take a look into that, but really, the large players in this particular space are Verizon and T-Mobile. How much of the IoT futures are already baked into Skyworks? Great question. When we look at Skyworks, I would say that a large percent, because they generate roughly, they generate most of their revenue from 5G. I would say quite a bit of the growth is already baked into the current price. There's no doubt about that. But what we're really talking about here is an increase in market share here. They've seen a significant increase in terms of market share. And the question is whether or not they can continue to do that. Now, the trends are fairly early here, but Qualcomm, as you can see over the last quarter, actually saw some revenue and income contraction, versus Skyworks has actually seen an increase in that. That is the opportunity. It really has just started here a couple of, last quarter. So if we're looking at 3 to 5 years, I still think that there is opportunity here to the upside. Does Dexcom compete with ABT monitoring? Let's take a look at ABT. So Abbott Labs is really one of the main competitors here to Dexcom. And the reason that I'm using Dexcom is because Dexcom is really a pure exposure to this. Abbott Laboratories does a lot of other things, where IoT and the exposure to IoT from Abbott Laboratories is relatively small. Abbott also generates right now on trailing 12 months, $34 billion in revenue. Dexcom only does about $2 billion in revenue. So the upside is simply much, much larger. But Abbott Laboratories is one of the other players in this particular space. Dexcom does trade at a large multiple here, as you would typically expect with some of these faster, smaller, more speculative biotech type opportunities. Certainly, the risk is higher, but also with that, the opportunity is fairly larger. Ken is saying, thanks, Tony. Great stuff. Do you see Honeywell's exposure to chemicals and petroleum as a future drag on company earnings? I certainly think so. So here's the thing is that I think Honeywell, in counter to that, their exposure to oil and gas is their exposure to the nuclear side. And when we talk about clean energy, nuclear is a big part of that solution. As much as a clean energy solution, nuclear is one of the safest. So the same way that IoT provides a counterbalance to a drag from their aerospace business, I think their nuclear exposure is actually going to provide a bit of a counterbalance to their their petroleum's business. I don't think the chemicals is as much of a drag as the petroleum would be. Raymond, you're very welcome. Thank you so much. Is this a risky time to enter these names for the long term with the rising interest rates? So we did analysis here on Tuesday for those of you that joined us, and you can watch the recording from the OptionsPlay hub, which you can access from at optionsplay.com/hub. You can just log in with your OptionsPlay credentials. I'll post this link into the chat window. The OptionsPlay hub we recently just launched to give you access to all of our recorded education. All of our recorded education is available to you. I don't know what I'm doing. All of our recorded education is available to you on the OptionsPlay hub. All of the trading reports, like the credit spread report, the cover call, earnings calendar, and daily liquidity report, as well as our straddle and unusual volume report, is all available to you here at the hub. If you go to the market outlook section, we just talked about this on Monday, and the question was, is this now a good time to enter the equity markets while interest rates are rising? So the research is very clear. When interest rates drop, S&P 500 goes up about 90% of the time. And on average, that lasts about 3 years, and the move for the S&P 500 is roughly 33%. But when interest rates rise, 75% of the time when interest rates rise, the S&P 500 is also up. So 3/4 of the time when interest rates rise, the S&P 500 continues to rise as well. So the evidence and statistics still show that in a rising rate environment, S&P 500 still moves up. The caveat here is just simply it doesn't move as much. So the average move on the S&P 500 over a rising interest rate environment is only 13%. But over the past 6 or 7 interest rate rising times, the average move of the S&P 500 is well over 20-25%. So right now we're up about 16% since interest rates started to rise. So we're not quite there to the average yet. So certainly the answer to your question is yes, markets can continue to rise even though we're in a rising interest rate environment. Great presentation. Do you believe 5G will supercharge the Apple 5G device conversation? Do you think that's already priced into the current stock price? The thing about Apple in terms of 5G is that I would say that the applications for your 5G device is simply not as compelling as other applications, simply because this, if your phone was able to access the internet 5 times faster or get 5 times more data to your phone than what it currently does, it doesn't drastically change the experience of your phone. Unlike other devices like your car, that does have significantly larger applications. So I think that it's nice to have 5G connections on your iPhone, but I don't think it's going to drastically change your experience of using your phone, just simply because across Wi-Fi, you already largely have that type of speed right now when you're at home. And it's not like you have a significantly better experience of using your phone on your Wi-Fi network versus when you're out and about on a 4G network. So for those reasons, I don't think Apple is going to be the main beneficiary, if you will, of 5G. I think more of the chip makers are likely going to be more of a beneficiary than Apple. Samir, thank you so much. Filippo, so when we send you the email with the link to the recording, all of our slides. So when you look at any type of market outlook, if you want the slides, all you have to do is click on the Watch on YouTube button. And what we always have are the slides within the description. So as you can see here on the description, we always have the slides. So every time we send you a recording on YouTube, all you have to do is go into the description and you can download the slides in the description. So every video we post, every recording that we post, in the description, there's going to be a link to the slides that you can download. How much percentage of the portfolio should be in 5G? That's a great question. You know, we have a lot of themes, right? We've covered everything from electric vehicles to renewable energy to cybersecurity to 5G. And these are all equally important opportunities in our opinion. You know, I think that from a infrastructure perspective, it is a big theme of mine over the next few years, and it does represent a significant portion of my portfolio, but it is spread out across different industries. So I don't think 5G as a theme should be more than 10 to 20% of your portfolio, especially if you have 4 or 5 of these different types of themes that you're invested across. That's really how I'm thinking about this. Comment on Apple's expansion into medical IoT. That is a big part of this, right? Now, the thing I will say is that I don't know that 5G changes that for Apple, because Apple's wearable devices largely rely on your phone to connect to the internet, and you know, faster speeds does not necessarily change that per se. Certainly, you know, Apple is trying to make the healthcare side of their business a significant part of their business, and potentially a more commercial side of the business, if you will. It is early days on that front, but I do think that Apple could be a leader in that particular space. So yes, I do see that opportunity. But again, Apple, you know, is a big business where medical IoT will be a relatively small piece of their business. So again, you know, that's where Dexcom, you know, where almost 100% of their revenue is derived from that. That's really where the opportunity is larger, even though there's no doubt that Apple is going to be a leader in this particular space. What's with smart cities? What about Jacobs Engineering? So Jacobs Engineering certainly is, you know, we covered that in our last session. Jacobs Engineering is an interesting company and is doing fairly well here, and mostly on the industrial side. But they are more on the industrial construction side. I don't know that they do a lot on the technology side. So you know, we do expect them to do quite a bit on the climate side as well. They seem to have some specialties within water, and specifically within the water systems. So when we talk about monitoring, Jacobs Engineering certainly could be one of those companies. But the thing about these types of professional services companies is that, look, they generated $13.4 billion in revenue in 2020. They're currently trading at a $16 billion market cap. These engineering companies trade at basically one-time sales. That's just their multiple. They don't trade at a significant multiple here. So that's why I don't particularly think that this is a strong exposure to the IoT and 5G space, because they're largely, they get a contract for $1 billion. That's their fee. There's no upside in it for them, if you will, other than, and it's not a reoccurring revenue, So when we look at these types of opportunities, you want to see companies that have reoccurring revenue. So the SaaS-based companies, when we look at Rockwell Automation, They sell both hardware and software as a solution. That's largely going to be a reoccurring business. When we talk about IoT as a service, that's also a reoccurring business. You look at Cisco, now 50% of their revenue is now SaaS. That's reoccurring business. That's a type of business that gets paid multiples. When you look at Jacobs Engineering, the contracts that they get, those are one-time contracts. It's not like a government comes back and buys, year after year water projects from Jacobs Engineering. So for those reasons, I don't think Jacobs Engineering is a great play for this. I don't know much about the lawsuit in Plug. I'd have to research a little bit more. Any thoughts on Marvell? So Marvell is interesting as well within the within that space of Skyworks and Qualcomm. Marvell more on the Wi-Fi side than the 5G side, but certainly has exposure to this particular theme. The stock hasn't done particularly well. That's why I chose Skyworks over Marvell. Skyworks holding up a little bit better than Marvell. How would you play these stocks in the current market conditions? So Aggie, again, what I was saying here at the beginning is that these are longer term investable themes. These are not necessarily short term, buy this and get out next month type themes. You're really investing in the long run. You're less concerned about where you get in, today. You're kind of investing it over maybe the next few months. You're buying some of the stock this month, some more next month, and you're investing for the long term. So you're less concerned about timing of the markets and more about getting exposure slowly into this type of opportunity. Does SNSR include some or most of the individual names you mentioned? Yes, SNSR does include almost all of the names that I've talked about here. Does it list options on it? That's a good question. I actually do not know. Let's take a look. SNSR does not have options listed on it. Verizon seems like a great defensive buy. Certainly from an income perspective, I would say yes. Personally, if playing the 5G, I think I would have a more equal exposure between stocks like Verizon and T-Mobile that has been a leader in this particular space. Do you see CrowdStrike and ZS playing a role in the security here? Yes, but not necessarily from a 5G and IoT perspective, more so from a corporate network perspective. Any companies or ETFs that have more exposure to China and Asia Pacific within 5G and IoT? So currently there aren't specific ones, at least not that I have seen, with any significant number of assets. So, even SNSR with only $400 million in assets, in my opinion, is still pretty small. I usually am hesitant to invest in ETFs with that small of a market of assets under management. So if you're talking about ones that are specifically exposure to China or Asia Pacific, I simply think that those are going to be very small. SNSR does have a fair amount of exposure to Asia Pacific in itself. So I would say SNSR would be that one. Again, Apple, I just don't think Apple is a 5G play. I think there are far more 5G plays than Apple. Sanjeev, as far as space goes, we've talked about it. Potentially there just doesn't seem to have enough publicly available, publicly traded companies that have a large enough exposure to space, other than Virgin Galactic. All the other ones are either not public or, large aerospace companies that have a smaller play in space. But we'll take a look at that and see if there are potentially an investable theme there. Okay, that covers what I have enough time here for today. Thank you so much for your time. I hope that you guys find this useful in giving you a better understanding of the opportunity, the theme, and the trends. So with that, I will send out the recording to everyone here today. Again, I hope that you guys find this useful. And I hope for those of you that are currently on a free trial, that you will consider supporting us and allowing us to continue doing this by becoming a member using the link here on your screen. So thank you so much. We'll send out the recording here in about 30 minutes or so that you can review this at your own pace with the slides. Thank you so much. Have a great day, and I'll see you guys on CNBC later tonight.